Good evening, everyone. Time for another silver update. You are looking at the 15-minute chart of silver provided by netdania.com. We had a very exciting day today, and if you follow my blog, you could see that I was documenting the steady rise and then the breakout effect that we had. We were still running the 90-degree angle pattern, and we were breaking out into new highs, touched 3750, and then, as you all know, Bernanke opened his mouth in his congressional testimony, and everything changed at that time. So we have some very, very important symbolism that happened today. The first piece of symbolism I want to take you to is actually in the price itself. You can see that the point where the reversal began was exactly 37.5. Now, I've drawn a line to indicate the normal volume trading in silver. If you remember our recent shenanigans of strange, anomalous reported data on this Globex spike, you can see that what occurred today is much, much larger as far as volume. But the first very symbolic and anomalous event was the move from, and you can see that this move occurred in basically 1 hour. You have a move from 37.5 down to 33.75 exactly. Now, if you take 37.5 and subtract 33.75, you get exactly 3.75. So that is not, in my opinion, a coincidence at all. They literally took the silver market down 10% in 1 hour. We're going to come back to these volume figures, but I wanted to take you over, first of all, to the testimony that was the cause of this. This PDF is a PDF of the statement. I'll go ahead and link this. This is a PDF of the statement made by Chairman Bernanke before he began the questioning and answer period. This was at 10 a.m. This was released exactly at 10 a.m. This is the time of the smackdown. I'm not going to read the whole thing, but I'm going to read the summary. And Bernanke states, the dual objectives of price stability and maximum employment are generally complementary. Indeed, at present, with the unemployment rate elevated and the inflation outlook subdued, the committee judges that sustaining a highly accommodative stance for monetary policy is consistent with promoting both objectives. However, in cases where these objectives are not complementary, the committee follows a balanced approach in promoting them, taking into account the magnitudes of the deviations of inflation and employment from levels judged to be consistent with the dual mandate, as well as the potentially different time horizons over which employment and inflation are projected to return to such levels. Thank you. I would be pleased to take your questions. Now, the first point here, and this is going to come out with the questioning by Ron Paul, but the first point to make here is this dual mandate that the Fed is citing, which is their mandates are price stability and full employment. They're lying about the unemployment rate, and they are lying about the inflation rate. So they are lying about their mandate. The inflation rate is much higher than they are stating, and the unemployment rate is much higher than they are stating. So, in my opinion, the Fed has failed miserably at their dual mandate, and of course, that's not very hard to figure out. If you're printing money hand over fist, and that money is going to government spending, then you're going to have a high private sector unemployment rate, and you're eventually going to have very high inflation as well. So In my opinion, the Fed is an utter failure at both of these mandates, and the only reason that that's not apparent to everyone is that they're just simply lying about the numbers. Now, let's go over and look at the questioning of Mr. Bernanke by Ron Paul, and it begins with a question about whether Mr. Bernanke does his own shopping.
Thank you, Mr. Chairman. Mr. Bernanke, if you don't mind, would you tell me whether or not you do your own shopping at the grocery store?
Yes, I do.
Okay, so you're aware of the prices. But you know,
I think perhaps Mr. Bernanke maybe should take some courses in lying, because he's not a very good liar.
this argument that the prices are going up about 2%, nobody believes it. You know, and the old CPI says prices are going up at 9%. So they believe this. And people on fixed incomes, they're really hurting.
Okay, so essentially what Ron Paul is saying is, Mr. Bernanke, you're a liar.
The middle class is really hurting because their inflation rate is very much higher than the government tries to tell them, and that's why they lose trust in government. But you know, this whole idea about prices and debasement of currency, if you loan me $100 and in 2 years from now I gave you 90 back, you'd be pretty upset. But we hand back money back that's worth 10 or 15 or 20% less, and nobody seems to be able to do anything about it. It's very upsetting. But it's theft. If I don't give you your full $100 back, if you loan me $100, I'm stealing $10 from you.
So, in other words, Mr. Bernanke, you're a thief. Okay, so in so many words, Ron Paul has said, Mr. Bernanke, you're a liar and you're a thief.
Somebody's stealing wealth, and this is very upsetting. But you know, in January at one of your press conferences, you said that you sort of poked a little bit of fun at people to downplay the 2% inflation rate. But if you say it's 2 and I say it's 9, it's compromised for the sake of argument that it's 5%. That you said that if it doesn't hurt you unless you're one of those people who stick their money in the mattress. But where are you going to put it? Are you going to put it in a CD and not make any money at all? So this doesn't make any sense. It doesn't encourage the savings, and it just discourages people. But I do want to make a point about prices, because prices go up. That, to me, is not the inflation. It is one of the bad consequences of the inflation, which comes from the increase in the money supply. And that's one of the bad effects. But, you know, you took over the Fed in 2006. I have a silver ounce here.
Okay, so this is highly symbolic. He is showing the silver bullet to the vampire. This is what is going to finish you off. He's showing it to his face. And this is the exact time that they did a coordinated, planned, and highly organized takedown of the silver price, exactly 10% in 1 hour.
And this ounce of silver back in 2006 would buy over 4 gallons of gasoline. Today it'll buy almost 11 gallons of gasoline. That's preservation of value, and that's what the market has always said should be money. Money comes into effect in a natural way, not in an edict, not by fiat, by governments declaring it is money. But why is it that we can't consider, you know, the two of us, an option? You love paper money. I think money should be honest, constitutional, still on the books, gold and silver, legal tender. Why don't we use it? But why don't we allow currencies to run parallel? They do around the world.
So this is a very clear challenge to the banking establishment. There's no question that this is highly symbolic, and you can see by the look on Bernanke's face that he is really being called out here. He's been called a liar, he's been called a thief, and now he's been shown the weapon that will destroy him. So, back to the silver chart. Now, you can see that we're rallying off of that low. They put in their 10% punishment And of course, that was a reaction. These are, in my opinion, we're seeing the battling symbolically of major factions. Now, I don't know if you subscribe to Bix Weir's good guy, bad guy theory and the road to Ruta theory, but you definitely have to give Bix credit. This appears to be the calling out of one faction and another, and the factions are definitely fighting. So the damage in silver, if we continue, the damage in silver would be very minor if we continue this uptrend. You can see we're tied just with a breakout point that only occurred as recently as the 23rd, and we're actually very close to being tied. We're just a little bit below the last shenanigans that we saw in the price. So we want to watch this price very carefully. We are now rising out of a bottom, and this may be the bottom for this move. If not, we will look for much, much higher volume as we begin to roll over again to the downside if they're going to follow through on this. Now, I've drawn a line here at the bottom to indicate the normal volume in silver. You can't go by that. It's just a guesstimate, a very, very rough guesstimate. And my projection was that the volume above this line was the cartel and their activity. So this volume up above this line, I've added it up and calculated it in various ways. Let me take the line off here so we can zoom in a little bit and get a little bit closer to the volume. Now you can see we're on the 15-minute chart, but for the major part of the smackdown, we've got a good 20. I've calculated it to be anywhere between 50 and 60 and 100,000 contracts, and that was during this initial smackdown. There seemed to be more of a smackdown that came in here, but then again, that kind of turned into buying volume, especially with this volume here. So my calculation is that roughly between 50 and 100 million ounces, 50 and 100,000 contract volume came in from the shorting. So if we go by the figure of 5,000 ounce contracts, then if we have 50,000, you're looking at roughly 250 million ounces, and if we have 100,000, then you're looking at roughly 500 million ounces. So we're looking at anywhere from 1/3 to 2/3 of the entire yearly mined output of silver being traded in a single hour, essentially, or over a very, very short course of time, maybe a couple hours. So let's look at the technicals real quick to see what kind of damage was done to the technical picture with this move. My guess is it will be very small, especially on the weekly. You can see there's very little impact, but as I pointed out before, the rollover that we had as we began to cross the zero line the last time we crossed with the weekly, we're now starting to look more like a rollover, a weaker cross. You can see we're not approaching that zero line as strongly as we were. We'll have to wait and see what the follow-up action is on this. So again, a very, very symbolic day that occurred today. We had the two key symbolic things done where we had the perfect 10% move coordinated by the central banksters to be in perfect timing with the showing of the silver bullet to the international bankster vampires and werewolves, and calling them out and calling them liars and thieves in public. And of course, they fought back with a 10% smackdown in the price of silver. Now, we also had a big move in the price of gold, but if you follow my channel, you know that I believe that silver is actually the key. Silver is the Achilles heel of the bankster Illuminati faction, and I believe that you can't put ernoughh importance to this fact that Ron Paul held up a silver coin in the face of Ben Bernanke, and he called him a liar and a thief. And we'll talk to you next time.